Assalamualaikum and hello everybody. Welcome to my channel. Today I would like to discuss about bank reconciliation. Bank reconciliation is the process by which the bank account balance in the cash book of the business is reconciled to the balance of the bank statement that reported by financial institution at certain period. Bank reconciliation is a statement that summarizes banking and business activity, reconciling bank account of the business with its financial report. So, first thing you must know the cash book of the business. The cash book of the business is to record the receipt of cash and cash payment. Normally we make by check, and it able to detect the accuracy of the flow of cash. And the third one, show cash balance in hand and in bank. Bank statement produced by the bank or financial institution show the sum received by the bank and also show the amount paid by the bank on his behalf and bank charges. The third one, we can compare the details of the bank statement with the bank account in the cash book. And the bank statement also can detect any mistake and also detect any fraud. The bank statement also can detect the different balance in the bank statement with the balance in the cash book. This is the example of cash book for two columns. So the debit side represents for cash and check increase, and the credit side represents for cash and check decrease. So we are going to use for bank column for debit side and bank column for the credit side. Bank column for credit side, normally we paid by check, and this one we receive by check. And this is the example of bank statement. And you can see that the payment will record in the debit side and it contrasts from the cash book. And for the credit side, it represents that the bank will receive check from the client, from the customer. Okay, this is the format of bank statement. The debit side represents for payment, credit side represents for received check, and this is the balance of the current account of the business. And this is the example of bank statement of the business. Normally, the business will use current account. There is a situation, the reason, where the cash book and the bank statement will give the different amount. There are three reasons for differences. Number one, the recorded in the cash book but not recorded in the bank statement. Number two, the item recorded in the bank statement but not recorded in the cash book. And the third reason, the item had an error in the cash book or in the bank statement. So we look at the reason where the amount of the cash book and the bank statement is different. So number one, the item that recorded in the cash book but not recorded in the bank statement. Number one, deposit in transit. Number two, outstanding check. Number three, non-sufficient fund. So now we look at the item that recorded in the bank statement but not recorded in the cash book of the business. And we should know the bank statement prepared by the bank and cash book prepared by the business. Okay, there are three items. Number one, bank charges that record in the bank statement, collection by the bank, and standing outstanding order that recorded in the bank statement but not in the cash book of the business. And there are some errors that will make the cash book and the bank statement have the different balance amount. So there is the reason number one, by the bank understated or overstated, and by the business understated or overstated amount in the cash book. Now, for the items that recorded in cash book but not in bank statement, it means that the business had record in the cash book, but the bank not record yet in the current account of the business. Number one, deposit in transit. Check that received by the business will debit in the bank column of the cash book but not yet credited in the bank statement. This reason incurred for the reason because the check deposit at the end of the month and it will require several days for clearance. So this case incurred when the check received by the bank, they have to process and they take a few days to clear the bank. Number two, outstanding check. Check that issued by the business to the creditors. Normally, they have record in the credit side in the cash book, but not yet debited in the bank statement. It occurs because the receiver not present the check to the bank. Because the receiver normally the creditor they will hold the check until at the end of the month. The third reason that item recorded in the cash book but not in a bank statement. Non-sufficient fund. Business received a check and recorded in the debit of cash book and deposit it into the bank. Unfortunately, the check was rejected by the bank due to non-sufficient fund. It means that no record in the bank statement and the bank had returned the check to the business. Okay, the next item that record in the bank statement but not in cash book. It means that the bank had record all the items in the bank statement immediately but not inform the business. Number one, bank service charges. Charge that imposed by the bank for its services in managing the business current account. Bank charges immediately had debited in the bank statement but not recorded in the cash. Number two, standing order, debit order, auto debit, or the payment made by the bank. Order or instruction that given by a business to the bank to make payment, for example, insurance and rent payment. The bank will directly or immediately debit the business current account when payment has been made, but the business not recorded in the cash book. The third one, credit transfer, direct deposit or collection by bank. The amount paid and deposit by the customer directly into the current account of the business. It will increase the amount in the current account of the business. For example, dividend received or received from customer. The amount collected by the bank on behalf of the business will credit the amount in the bank statement but not recorded in the cash book. Error can be incurred in the cash book or error can be incurred in the bank statement. So now we look at the error in cash book. There are 4 categories that error can be incurred in cash book. Number 1, error for receipt understated. Number 2, receipt overstated. 3, payment understated. And 4, payment overstated. Number 1, the actual amount in the bank statement is 500, but for the amount in the cash book debited with 50 ringgit, RM50. So the bank write the correct amount, but there is an error in the cash book, understated with the amount 450. So we have to reconcile for cash book by adding 450. The second one, the actual amount in the bank statement is RM500, credit RM500. But in the cash book, we just add debit 550. This one we call overstated. And we have to make a reconciliation by reduce RM50. The third one, the actual amount of bank statement is debit RM700. But for cash book, we just record credit or make a payment RM70. So this one we call the error for payment understated. What should you do is we have to make a bank reconciliation by reduce the amount for cash book part or cash book category with the amount RM630. Number 4, bank statement debit RM700, but we have made a mistake, the business made a mistake with credit the amount RM770. This one we call payment overstated. We have to make a bank reconciliation by adding 70 in the cash book part. Error in the cash book also can incur that we call reversal error, where receipts are recorded as payment or vice versa in the cash book. For example, received check from customer 200 are recorded as payment in the cash book. So we have to make a bank reconciliation by adding cash book part RM400. We double the amount because 200 RM200 we have to cancel the wrong account and then we have to add another 200. So the total amount is RM400. This is the adjusted journal entry. An error also can incur for under cash book where the transaction not recorded yet in the cash book. For example, paid insurance with check RM250 were not recorded in the cash book. So we had to make a bank reconciliation by reducing cash book part with the amount RM250. So we had to record in the adjusted journal entry debit insurance expenses and credit bank. That's all for today. Please subscribe, like, and share. Thank you.